Applying EdgeRater to your trading. What a great title for a webinar. And tell you a little bit more about what we're going to do here in just a sec. But first off, there is a disclaimer, and you can read all of that if you wish. And or the key points are that I'm not an investment advisor. I'm not recommending any stocks, but I probably will be talking about a few. I trade, and so you know, I might hold positions in some stocks, and also know that backtesting has limitations. EdgeRater was primarily a backtesting platform, and all trading involves risk. Do your own due diligence. So with that said, let's get started. So for those who don't know me, and there's a lot of people who are new, just got back from a couple of seminars in California, the Orange County workshop weekend a couple of weekends ago, and then just recently the High Growth Stock Investor workshop in Palos Verdes. And I had the opportunity to meet a lot of new people down there, and we have a lot of new people online. So my background is I'm a software developer. I'm actually British. You can probably tell from my accent, although I've lived in the States now for about 20 years, or at least over this side of the pond for about 20 years. So clearly I sound more like an American, right? Okay. I was working at Microsoft, and I was trading as well at the same time. And I left in 2007 to design some software that was going to help me with my trading. And the result of that effort is EdgeRater. I released EdgeRater in 2009. Since then, in 2010, there is another program that I released, which is a kind of a subset of EdgeRater, but it was designed for people. It was designed for people who only wanted to follow one particular strategy. So it was a cheaper version of EdgeRater essentially, but just focusing on the one strategy. But today, really, most people use EdgeRater because it contains everything. So even though there are two programs, don't get confused. If you still want to get use the cheaper standalone version of the ETF Trading Bandit, that's fine. It still works. It's still great. So my original concept for the program is I had this idea of looking at the market, and obviously every day when you're looking at the market, you see what stocks were the biggest gainers of the day. Very easy to find them in any kind of scanning program. And so my idea was what would happen if I found the 10 best stocks of the day, the ones that made the biggest gain, and then I sold them the next day, either at the open, so I bought them at the close of the day they were the biggest gainers. And then what would happen if I sold them the following morning, or if I bought them instead of buying them at the close, I bought them the following morning and sold them at the end of that trading day. So that was the idea, and I couldn't really find any software that would show me what the result of that would be. So I wrote EdgeRater primarily to show me that kind of answer. Not specifically that kind of answer, but in a general way you can configure it to show you many different answers, but that's the one I really wanted to get done. And I ran this on very recently, because I sort of revisited this idea last year. And so from January 2013 to October 2013, when I first talked about this idea with people in various trading seminars, I asked the question, do you have any guesses as to what would be a better strategy? Would it be better to buy at the close of the day and sell the following open, or buy at the open of the next day and sell at that close? So that was the premise, and you can have a guess now and sort of in your head think about what you might think would be the better strategy. And here's a chart which basically shows how the strategy performed when you buy at the close and you sell at the next market open. And I ran this from January 2013 to October 2013, so a fairly short time frame. And then I thought it would be good also to show what happened if you bought the open and the following open and then sold at the close, and you ended up with a chart which looked very different and very negative, but fairly consistently negative as well. So when you see something that's sort of consistent like that, then I think that you can apply that as an edge. That's an edge in your trading, and you can apply that to your trading. So trading is all about finding an edge, finding out what works for you. Various people have different ideas, everybody follows a different strategy, and you basically try and find something that is right for you. So it was a shortish time frame, so I wanted to try again and see and just run this on last year, so from January the 1st, 2014 through to the end of March, just a couple of days ago. And we ended up with somewhat of a lower left to upper right for the buy at close, sell next open. And then the big test was buying at the open the next day and selling at the close of that day, and you ended up with a very similar looking chart. So what that seems to imply is that if you buy stocks that are the biggest gainers of the day, you have an edge in the market if you buy them at the close of that day and you take advantage of any gaps that occur in the market and you sell them the following morning. You have a big disadvantage if you're going long those same stocks the following day and then you sell them at the close of that day. But obviously you have a big advantage if you're able to short those stocks, because that is actually the strategy that would yield you the biggest percentage gains if you're able to short them. But shorting is not for everybody, and it's a little bit difficult. You might not be able to find the shares to short. But interesting nonetheless, and I did actually start to trade this strategy after I presented it, because I wanted to see how it really worked in real life, because as I said before, backtesting has limitations. So I did trade that for the first 3 months of last year, and it actually performed pretty exactly to the graph you see here. So it worked out very well for the first part of the year. It had a little bit of a drawdown here, and then as we came up through here, by the time I finished trading the strategy, it was ahead a little bit, pretty much even. If I'd have followed it for the whole year, we probably would have seen this exact curve. But there are some limitations in trading it. We're talking about low price stocks. You can't always buy at the price you want to buy. If you want to buy at the close of the market, you have to place an order 15 minutes before the market closes, and that will be a market on close order. If you don't do market on close order, then you have to do a market order, and you have to kind of time it yourself. So it takes a little bit of maintenance to follow that strategy, but it is possible. Anyway, I sort of say all that as a leading to what EdgeRater is all about. That was the original concept, but now it is much more than that. You can still do all of that sort of testing, and it's great to do that. And if we get some time in a later webinar, I'll show you exactly how to set that up to run that test. But most of the users today use trading templates, and trading templates are basically an easier way to get trading signals, to analyze stocks, and they take ideas from experts and people who have written books, people who are teaching, and take those ideas and allow you to follow those ideas without having to do any coding yourself. So I've done all the coding, and every month I produce a new template based on various things and hot topics in the trading world. So if you have the EdgeRater program, the base program, which is a desktop application, it comes with a bunch of templates, and then I produce templates every month. And it's what I would call a permanent license piece of software. So once you have the software, you keep it, and you can use it essentially forever. And then trading templates are that's sort of a subscription side, but you get all of the templates when you buy the software, and also you get the next 12 months of templates all included in the purchase price of the software. And then there's a very small fee going forward if you wanted to get another 12 months after that, but you don't have to take that option if you have everything you need in the software. So templates make everything very easy, and there are 3 steps to running any template. I would recommend downloading the trial of the software if you don't have it, and playing with it this week, because what I'm going to do is talk about how to quickly run a template and some of the templates that I like to look at daily and weekly. You can follow along and see exactly the same things I'm seeing if you have downloaded the trial. But when you look at the software, you'll see that I'm going to bring the software into view now. you'll see that templates are listed on the right hand side. For templates that are new, there's always a list. There's a category over here called new this month, and to the left of the category is listed all of the updates that have been happening over the various years. So I've had the templates working now for about 2 years, and so we've got quite a good set of templates in the system. To run a template, it's very simple. You just select the category that contains the template, and then on the left the actual template will appear. A template essentially is something that can be run to produce a report. So whenever you select a template, you choose to run it over a list of symbols, which you choose on the left, and then you hit the run button and it will process the instructions in the template and produce a report for you. So templates, when you press run, produce reports. And reports are always output in Microsoft Excel format. You can view them all within EdgeRater. You don't need to have Microsoft Excel, but whenever you run the template, it will actually produce a report, and it will put it into a folder on your hard drive. And this is an example. It's under EdgeRater. So your documents folder, EdgeRater reports. Every time you run a template, you'll find the Excel file resulting Excel file will be put in here, and that's great for review later on. You don't have to open those up in Excel. You can open them up also within EdgeRater just by pressing the open button here to look at a previous report. So that's the idea of running a template. 3 easy steps. You select the template, you select the symbol list, and then you press the run button, as I say here. And there are various templates in the system. I think right now we have probably, well, I don't know, there's close to 100 templates in the system right now, and they all follow different strategies. My advice would be that you don't want to run every single template. People focus on 1 or 2 strategies, and they get good at those types of trading opportunities. They get very familiar with those, and then obviously the program is deep enough that you're not going to be bored with it. There's lots more to explore in the program. But my advice would be to stick with just 1 template and run that, going over several months, and get good at that. And then you can start exploring around. So don't be put off by the fact that there is close to 100 different templates in here. People don't run all 100 every day. In fact, I run 2 templates, and I'm going to talk about what they are today. And other people run obviously their own different sets of templates. Also, this, by the way, of this PDF that I'm reviewing here is online. I'm going to show you where that is, so you can download this and review it. But it contains some simple instructions about how general way to operate a report after it's been produced, how you can filter it and sort it, and then how you can view charts. So this will be a useful tutorial for you. So I'll show you where that is. Basic operations. You can do sorting, filtering. You can display charts. We're going to get into that actually live in the software. There's links in this PDF to where you can find out more about the charting side of it. And there's this Easter weekend special offer as well. So I just mentioned that up front here. And that is basically, for Easter weekend, we have a 40% discount on the software. So instead of $1,997, it's only $1,197. And you'll find that offer if you go to edgerater.com. You'll find all the details about that. So great time to get involved in the software if you are interested. And at the end of the PDF, you'll find a bunch of resources, links, installation, getting started, data tutorial, the dialogue tutorial for charting, the new user orientation playlist, which is on YouTube, information about how to get support, and also there is a shared folder. And make a note of this, because this shared folder is where you'll find this PDF report. If you just make a note of this down here. I will be recording this and putting this on YouTube as one of my YouTube channel videos. So if you don't have time to write this down right now or take a screenshot of this, when you look at the video review, you'll be able to go to this page and find that that PDF. But in that shared folder, there is actually way more than just this PDF. You will also find a bunch of symbol lists that that you can use, and other information that that I just put on there and update fairly frequently. So it's always a good idea to have this link in hand. Okay, so having said that, let's get into applying EdgeRater to your trading. So I talked about templates, and one of my favorite templates, which is actually a brand new template, just released in the, I think it was actually an April template. So if we look under new this month, April, okay, we'll see all of the new templates for April. And so here are the two new templates that were released for April. The ABC down template, and then this in play template. Now this is one of my favorite templates, and I run this very frequently. In play, and it's basically how you can look at the entire stock market and find what has been moving over a certain period of time that you choose. Could be 1 day, could be an intraday time frame, could be a week, could be a month or a year, whatever you choose. And I'll run that now and talk about what it's showing you. So it's under the hot topics category. So you find hot topics over on the right over here. Click on hot topics, and then there are currently two templates in that category. There's in play, and then there's this range scan template. But select in play. Choose the number of days that you're interested in reviewing. You can change it down here just by typing in a different number. I'm going to leave it set to 10. So I'm looking back essentially over the last 2 weeks. Well, let me set it to 9 because over the last 2 weeks there's only 9 trading days because today is a market holiday. So I set that, and then I choose a list to run it on, and I have a list of all securities that are over $1 and over 250,000 shares. This list, by the way, the symbol list, I've put on the link that I just showed you to. And all you do is you hit run. There's 2,860 stocks in this list, says down here, and we'll go through and it will process and come up with a report. What I always do when I'm looking at a report is I like to click the X over here on the symbol lists pane or panel so that it collapses over to the left hand side, give me a little bit more room to look at the report. And I also like to click the X over here on the template panel, and that collapses over to the right hand side. If you ever want to get those back, by the way, you just click on where it says symbol lists, and then you can pin it back out and make it stick out. But after I've produced a report, I like to get rid of those just to give me a bit more screen area to look at. So what's this template showing us? It's showing that out of all of the however many stocks I said there were, 2,860 stocks, it's saying what has been in play over the last 9 days. So what does in play mean? It means stocks that have had the biggest move from lowest low to highest high, or the other way around, highest high to lowest low. In that case, the maximum play would be a negative number. But it also shows you much more than that. But the main column to focus on is the max play column. So it's talking about Radar Electronics. We can see immediately it's a $2.56 stock. But over the last 9 days, or the last 2 weeks of trading, it has gained, or it has had a low to high of 90%. Now, before looking at a chart, you can also see some other stats about this particular stock. For instance, the low to high column is shown here. The low to close column is shown here. So there's a 50% gain from the lowest low to the close. There's a minus 21% loss from the highest high to the close, so we know it's not currently at the highest high. It's actually had a bit of a pullback. And then the PC to see is the prior close before we started measuring to the close, which is a 51% gain. So essentially, if you're looking at what is made, what percentage gain the stock has made over that period of time, you'd look at the previous close to close column. And you could also look at the open to close column, slightly different to the previous close to close. Obviously, there would be a difference, would be the gap that occurred before we started doing this measurement. Okay, so lots of information you can see from there. You can also see a couple other things on here. This template is really all about indicators that use the lowest low and highest high as part of their calculation. And there are a couple of indicators that are quite famous that use that. One of them is a rune. Not many people talk about rune, but it does use lowest low and highest high. And you'll find the numbers in a rune are interesting. That you have the up and you have the down rune, which is basically telling you how many days there have been since it was at a high and since it was a low low. And then you have the oscillator, which is basically the difference between those two. You also have slow stochastics, which most people are familiar with stochastics, and stochastics is a measurement of where the close price is currently between the lowest low and the highest high. So if stochastics are saying 65 over here, it's saying 65%, then you know that over that period of time that we're measuring, and remember this is 9 days, that the close price is now 65% of the range of the lowest low to the highest high. And then also in stochastics, there's this column here called bars since 20 crossing up. So 20, stochastic value of 20, a lot of people talk about. You find it written about on many trading sites, that a signal could be generated when the stochastic value crosses up through the 20 level. And also there would be a sell signal when the stochastic value crosses down through the 80 level. So this will tell you how many bars there have been since a cross up through the 20 level. And if you're looking for things that are crossing up through 20 today, you just sort by this column and you look for one value. So what you can do is just actually set the filter in here and say I'm only looking for stochastics crossing up through 20 today. So every one of these stocks now is where stochastics are crossing up through 20 today. But if you wanted to find where that happened yesterday or however many days in the past, you would just set that filtering to a different value. But I'm going to clear that for now, go back to where we were, and I'm going to sort by the max play again. All right, now to view a chart, it's the same in pretty much every template. What you do is you select your cell. Okay, so I'm clicking in this spreadsheet on a particular cell, on a particular row, within a particular row. And then I can either double click, which will pop up a chart, or the other option, and the chart came up in this window over here. Let me bring that into view. Or what I could do is you can click on the cell and then there's a view chart button in the top, in the menu up here. So you can click on that, it will also bring up that same chart. If I'm looking at charts and the spreadsheet together, most people have more than one monitor, and I certainly do here. But for the purposes of this webinar, I can't really show all of the monitors together. So what I'll do is I'll put the spreadsheet next to the chart and just arrange it in that way. And that way we're able to scroll through the template. And when I say scroll through it, what I mean is I'm going to scroll through a report. So I'm going to place my cursor and activate this particular cell in the report, which is the max play. And then I'm going to use the arrow keys on my keyboard. I find this to be the quickest way to actually scroll down through a list and take a quick view at the stocks that are in that list. You don't have to use the arrow keys. You can obviously just click on it with your mouse if you prefer to do that. If you don't have a mouse, you can use the touch, obviously, whatever way you would normally move around a document. But personally, I find it much quicker to use the arrow keys to move around. So we'll take a look at these stocks and we'll find out why they made the list. So let me zoom in. The template is linked to this particular chart layout. If you don't like this chart layout, that's fine. You can choose your own chart layout and turn off linking to template layout. That way, whenever you look at a stock, you'll see your own layout. So you may have your own preference of indicators you like to see. That's fine. You can set them onto a chart and save it, and always look at that. But mostly all of the templates in EdgeRater are linked to layouts that are applicable to what the template's trying to show you. So it just makes it nice and easy. And also, if you change the, think about, if you change the period that you're looking at, right now we're looking at 9 days, so all of these indicators are set in here at 9 days. For instance, the green line up here is your highest high over 9 days. Your red line down here is your lowest low over 9 days. The Arun oscillator is a 9-day oscillator, and stochastics are set to a 9-day stochastic with a smoothing period of 3. So if I ran the template for a different period, and then I'm starting to browse through, the chart will be updated with the right indicators set to the right periods of time to look at. That's something you don't find everywhere or anywhere else, and so I think that's a very powerful thing to know about. Also, I should mention that whenever you're browsing through results, you will have this yellow annotation which is pointing to the bar or the date that the report refers to. So notice in the report there is a date column, and the date is April 2nd, 2015. So I know that the report has been run on stocks for that date, and so now as I browse through my list, the annotation is always going to be pointing at that date. Not so useful when you're looking at the very last day, because you always know that the last day is going to be the last bar, but you can always run this report for a prior day. So you can choose any historical date, run the report, and then this date column will be reflective of that date, and then as you're browsing through here, this little highlight will be useful for showing you exactly where you were on the chart. I'll do that a little bit later. So anyway, let's just take a look through some more of these and find out, see if we can see why the templates picked it out. So first of all, 90% between the highest high and the lowest low over 9 days. Okay, we know that the lowest low is 1.71 and the highest high was 3.25. So so that's basically from this level here where my cursor is up to the highest high. So maximum amount of money return you could have possibly achieved in this stock was 90%. Of course, nobody is going to achieve that because you'd have to. It's possible that you would achieve that, right? But very unlikely. We also can see that lowest low to close is 50%. So lowest low is down here, close is up here. So there's a 50% gain between there and there. It would be more achievable to make that than it would be obviously to make the full amount. The full amount probably is never achievable. Okay, so let's just scroll through here. And obviously we're finding what we're locating are stocks that are in play. They are stocks that have, over that period of time, made a move, a big move. So if it's a stock that's been asleep for a while and suddenly woken up, maybe it was in a squeeze, volatility had dried up, and then all of a sudden there's interest in the stock again, it's going to appear in this template. So my thought is with this template is if you watch this every day, you're never going to miss anything. You're never going to miss a stock that's moving. You will always be alerted to it. So that in a way that's the reason that I really like to run this template. Now obviously when you run a template, it saves the report, as I said, in the folder, the reports folder, so you can go back and you can look through historical values too, which is very interesting to do. What you can also do is, if you haven't previously run the template over all those prior days, you can still do a historical scan. So if I let's go back to, we'll reset the template, which puts it back to before I ran it, and I'll choose to do a 2-week scan, which is 10 trading days, but I'm going to choose a date to run it on. I'll choose a date at random here. Really at random. I'm just going to, I don't know, we'll click on, I have no idea. So September 1st, 2014, for example. All right, and with most templates, you can actually set a historical date, and you can say run this scan now, as if it was September the 1st, 2014. And this is interesting because now you can run any of the strategy templates where you're trying to follow a strategy, and you can always see the results. You don't have to wait for the next trading week to see what happened. You can just follow it through on the chart and see what happens. It's a very good way of becoming an expert at the particular signals. Okay, so this template is now run I ran it for September the 1st, 2014, but the last trading date for that day was August the 29th, 2014. And these are the stocks that have come to the top of the list. So as we click on through these, we'll find, and as I said before, this is where the little annotation really comes in handy. So the chart now there's much more data on the chart, obviously, because we're looking back last year. But this is picking out the date that the scan was run on, which is 8/29/14. So if you ran this scan of the evening of 8/29/14, you would have exactly this group of stocks in your list. And now the big advantage is we can see what actually happened to those stocks over the following days. And as we go down through the list, you can see exactly. Now these stocks are all stocks that have the maximum play. You might be more interested in stocks that are coming up through the 20 stochastic level. So what you would do is what I showed you before. You'd come over to the slow stochastic set of columns, and you would filter this based on the 1 day. So it's just meaning that at close price today, the stock has just caused the stochastic level to cross over the 20 level. And I'm just going to look only at those ones. Now I'm filtering by that. I can also sort by max play. Okay, so now what I can see is that mostly the max plays are all negative over that period of time, but we've got a couple that were positive. Alright, so now if I look through charts, what I should be seeing if I'm looking down at the stochastic is that it just started to cross above the 20 stochastic level. And I find that if you have the chart set so that you're always looking, sort of having this event in the middle of the chart, it kind of gives the game away a bit. It doesn't really let you focus on theoretical trading. It's interesting to look at and quickly, but a better way to kind of test yourself is actually to put the chart into replay mode. So there's a button up here called replay mode. The background of the chart will change. Hang on one sec. To indicate the chart's in this special replay mode. And what that means is whenever I click on one of the signals now, this last date is at the very end of the chart, and I can't actually scroll this chart forward any further using the regular scroll bar at the bottom, but I can move the date forward using the replay mode date up here. And this provides you with a great way to, and this works with any template, so if you're interested in squeezes and breakouts from squeezes, MACD divergences or ABC type moves, linear regressions, this will work equally well on all of those reports. So you might run this, and this is essentially showing you what you would have seen at the end of that trading day. So you can quickly scroll through here, and then you can make a decision, hypothetical theoretical decision, about whether or not you would consider this a good stock for trading on that day. And if you find something that you think is good for trading, and I'm not going to suggest, 'cause I have no idea what happened here, but this is a way that you would be able to run through hundreds of scenarios and find out and get a real feel for how these indicators might suggest what future prices are going to be. So let me just run this forward a little bit. So I found a stock here that, I'm not saying this is interesting, it's just a kind of a random thing I found, but this will be how to use the replay mode. Okay, so we have a stock that is making essentially a higher high, I guess. There's a high here, a low here, a higher high, potentially a higher low, and it's come up on this scan as being a crossing above the stochastics are now starting to cross up. Okay, I can take a look at more history of the chart, see if we like the look of that. Potentially we might like the look of that. And so what we would do now is just hit the play forward button, replay mode, click on next, and see how the days play out. You can decide whether or not you would have been interested in buying the stock, whether or not you would be selling, whether or not you would be shorting. And as you go forward through the days, you can sort of get an idea for where your stock level should be, you know, and it really shows you how the markets move, and how, you know, sometimes how your stop levels are taken out, because you know, everybody puts their stop in the same place, like for instance here, and so everybody gets taken out of the market, and you know, in that case it was obviously a good level, but you know, great to play this forward and see how the prices move. You know, and if you had a little bit of a drawdown, obviously down here, you know, if you were like too scared about taking your money out of the market, you would have been okay, but that would be a dangerous thing to do every time. So you know, trading is about limiting your losses. So you obviously want to have a stop at certain levels, and you can sort of see where the levels would be good. So I find that a good way to test yourself. And you know, obviously down here, let's go back to where we were with public storage. As you come down here, you know, this is a point where if your stop is taken out and it's not a hard stop in the market, this is a point where you might say, you know, I'm going to give it a bit of room to come back here, and then of course every day it's getting worse and worse. I don't know if that's ever happened to you, but you know, it can be detrimental to your account. So anyway, that's a template I like to look at every day. Take a look at some questions over here. If you have a question about this template or anything with the program, please just type a message in the chat box, and I will try to answer it. And by the way, I'm planning to have a regular, I'm thinking Saturday morning webinar, where and I'll bring up if you go to the EdgeRater page now, I'm just going to show you what you'll see on there. If you go to the courses, so if you go to products, you'll find out about the Easter weekend deal. If you go to courses, you'll see upcoming webinars. So right now, if you click on 3, which is the 3rd, you'll find the today's webinar. The next one is scheduled for the 11th, which is next Saturday. Click on that. You'll see it is the weekly stock market wrap. And basically what I'm planning to do is every Saturday for the next while, we'll see how it works. Every Saturday I'm going to have an hour where I'll talk about some of the things, analyzing the prior week's market using EdgeRater, but also leave some time open for questions. So if you're using the program every day and you've got a burning question and you haven't asked it in the forum, or you didn't want to do that, or any other way, then this will be a great way where everybody can learn from each other, because as you ask a question, I'll answer it, and I think that'll be quite helpful. And obviously it will be sort of right on your mind at that time, because you would have used the program throughout the week and found these questions. And they could be any question, could be a simple question. Don't be worried about asking any questions in those webinars. But if you go here to the web page under courses, you'll find the register button for the 11th. Go ahead and register for that, and I'll just judge by how many responses we get, how many people show up, about whether or not that's a good idea to continue. Obviously, it's going to take some time out of the Saturday to do it, and I'm not sure if everybody would think that's a great time. But either case, if you either look at it live or you want to see the recording, and yes, it will be recorded, sign up and you'll be sent a link to the recording. Excuse me. All right, so looking at some questions. Yeah, it would be nice to add Kahuna for the HGSI crowd. Well, Steve, the Kahuna is actually, if you look under your scripts, your templates. So I'm just showing you in here stocks in play during the last 10 days. That's just this template. This is all about highest high to lowest low. I've got nothing in here about impulse indicators. I would categorize Kahuna as a impulse indicator, but there are other templates that have that information in. Okay, now if you decide that you have a particular set, and this leads into another question we got from Dan, if you decided that this set of columns is you know, not exactly what you want to add some other columns in or remove columns, you can create your own templates. It's quite straightforward to do, and we may, depending on I would like to show that. I'm not sure if we're going to get time today to show that. We'll see. If we do have time at the end, I'll show you that. Otherwise, we'll take one of the Saturdays to maybe next Saturday to look at that. That's more of an advanced type thing to do. Most people don't do that, but I understand that as you get into the program, then you more and more want to customize things, and so I think that would be a good thing to do. It won't take long actually to show you how to do that. Okay. Gary. Okay, which template works well with the GIR report? Now, Gary, were you here yesterday for the webinar I did for the HDSI users? If you were, I talked a lot about HDSI specific stuff. Today is really more about is open for everybody. And so, yeah, so if you look at the recording for that, Gary, you'll see the template for the GIR report. But it's all of the things that are specific to high growth stock investor are under the HDSI category. And then the GIR report would be your group history analysis template. Anyway. Okay. Okay, just looking at some more questions. Yeah, so Gary, that question is, I think I answered that when I talked about Dan's question. Yes, you can customize templates, and I can show you that at some point, either later today, if we have time, or next Saturday. Okay. Yeah, quick demo of how to backtest I think might be more appropriate. Yeah, template building. Okay, well, you know, it seems like a few people are interested in putting their own templates together. I think it's great to do that. Obviously, you put together what you want, right? So it is very flexible and lets you do that. Now, right now, in order to put a template together, you do have to have Excel. Microsoft Excel installed, so as long as you have Excel on your computer, you're able to put a template together. You don't need to have Excel in order to run templates. Okay, and yeah, a lot of users of EdgeRater are HDSI users, but there are also a lot of people who don't have HDSI, so have to cater for everybody here. All right, backtesting in the program. I will talk a bit about backtesting now. I'll say there's something for next weekend I wanted to do today, but I think we'll probably save that for next weekend, and that was all about linear regressions. There's another one of my favorite templates to run, but I think that will be kind of appropriate next weekend when we're looking at the market wrap. So I'll talk a bit now about backtesting, which was the original intent of the software. So right now we've been focused on this tab in the program, which is the templates tab, which is where most people spend their time. There's a designer for charting. This is where you put together your own charts. We'll talk about that another time too. And then the last two tabs are your backtesting tabs: entries and exits, and trade simulation. So the idea with entries and exits is you want to produce a set of entry signals that you can then run trade simulations against, and optionally you can produce exit signals too. You don't need to have exit signals, because what you can do is just set your some stop losses and profit targets without having exit signals, and you can also just run a strategy that exits after a certain number of days. So you don't always need to have exit signals. So let's put this. I'm going to put the historical date back to today. So if you click on historical and click on clear, that's going to set that back to today. I'm going to reset my template. Don't necessarily need to do that, but it's always a good idea as a process to put it back to today, so you don't get confused when you run another template and it's showing you signals which are actually for last year. And so with backtesting, what you can do is we'll pop out this chart scripts tab, and the types of scripts that you can add to the entries are scripts that are scanning scripts. So these are things that scan the market and give you a 1 value if a condition is true, or a 0 value if it's false. And so all of the system scans are under this system scans heading, and the system is configurable that you can write your own. You can always take a look at how these are built and write your own based off of those. So I'm going to do a simple one now, which is this script here: cross above upper Bollinger Band. I'll just double click it, and it pops it in over here to this selector. Okay, I'm going to run this. I'm going to choose a shorter list, because just for time's sake. Everybody has this list. It's a list of stocks that have options associated with them, or weekly options, and there should be roughly 400 stocks in that list. You'll note that I also have this up to date for April 2nd. So just to note that we're now going to be running this test on this list. The other thing to note is let's look at the update options for this list. So this list has 10 years worth of data, which means that if I don't set a date filter into over here, I'm actually going to run this over 10 years of, over the last 10 years, which is fine, and I'll do that. I'm just going to hit run. So basically I'm trying to produce a set of entry signals whenever stocks crossed above their upper Bollinger Band, and using the Bollinger Band periods of 20 with 2 standard deviations. So it's processed, it's 400 stocks, and it's got 10 years worth of signals in here. If we go back to the very beginning, May the 2nd, 2005, we see that there were 1, 2, 3, 5 stocks that had that criteria. Similar to before, if we double click and look at a chart, and let's just set this chart up. We're not going to be in replay mode. I'm going to zoom out of this chart. Okay, there we go. Zoomed out a little bit more. Just put the chart a little better. Now I'm going to put a layout on here that shows us Bollinger Bands, because we're looking at crosses above the upper Bollinger Band. So if I don't have one already in here, I guess Squeeze is has Bollinger Bands in, as you can see here. Alternatively, if we didn't want to do that, what we can do is we can set this chart back to a default chart with no indicators. This is where we can start from scratch, and just drag in the area Bollinger Band indicator. Drag that over here. So now this chart just has Bollinger Bands in. All right. Now, if I come over to my template, I'm going to position it somewhere in the middle of the data over here, and I'm going to turn on annotations. Okay. Now I'm looking at a chart that put that in the middle again. Now I'm looking at a chart that every one of these signals now will show this exact behavior, where price has just crossed above this upper Bollinger Band. All right. And as we go through this list, it's always good to once you've put, once you've set a date filter, you can use the date filter to indicators into the, or scans into the security selector, it's always good to go and take a look at some of the signals just to make sure it's picking out what you expect it to be picking out. That way you know you've got your script written properly and you know it's doing the right thing. So every single one of these is a cross above the upper Bollinger Band. And you can, obviously what we're doing here is we're just sort of visually looking to see what's happened after stocks cross above the upper Bollinger Band. Probably you've heard many things from people telling you what happens when stocks cross above the upper band, and this is a way that you can verify if those things that you've heard are true. What you would do is come to your, so we've got our list of entries. I'm not going to put any exits in now. I'm going to go over to trade simulation. Okay, and that's going to use that list of entries to do a trade simulation. So what you would choose in here is your entry rules. So you say, as an example, we'll say let's take a long trade. Sounds a bit risky, but let's take a long trade. Whenever stock crosses above upper Bollinger Band, we'll enter on the close of that bar. We'll hold for a fixed hold period. We're just going to, this is just an example. You can do whatever you want in here. I'm going to hold for 10 days, and then we're going to exit at the close of the 10th day. Not going to put any stops in. I'm going to set some portfolio rules. Let's say we'll allow duplicates, meaning if the stock appears while it's already in an open trade, it will take another trade. So we'll allow duplicates. We'll set initial equity to 100,000. We'll trade, let's say we'll trade 1,000. Okay, $1,000 per trade. We won't factor in commissions. So it's basically a very simple sort of simulation, and then you just hit run. Now that's going to take all of those signals. I don't know how many there were. We'll find out in a minute. And it's going to produce a trade list for that entire set of 10 years. So 27,000 trades that were made. It says right here, 27,813 trades. And so it will produce this list. And for each trade, it will show you the entry date, the exit date, the entry price, exit price, the profit and loss percentage, the actual profit and loss in terms of dollars. These columns are really interesting, the MFE percent and MAE percent. It stands for maximum favorable excursion and maximum adverse excursion, meaning while you were in the trade, if you're looking at adverse excursion, it's like how far did the trade go against you. In this case, we can see it went against us by 0.63%, or it was actually $6. We can sort by any of these columns. We can find out the really scary ones, and you can take a look at some of these. The other thing to bear in mind is that when you do backtesting, it really highlights if you have any problems with data from your data provider. It really highlights where those issues are. So it's always a good idea to check on numbers that seem extreme. But here's an example. There's an adverse excursion of $494. That's $1,000 per trade, if you remember, which is a 48% loss on that trade. Likewise, you can look at maximum favorable excursions, and now we're getting something that is a little better. Of course, we could never have lost any of these numbers because each trade was only a $1,000 trade, but we were able to realize more than it was possible to lose. So that's always a good thing. So take a look at let's take a look at this trade. I guess we can see that VHC went from 0.75 entry price to $2.10. And if we double click, we'll look at the chart. We'll see exactly where that. So the annotations, now we're looking at a trade list. The annotations are going to show us where the entry was and where the exit was. The entry was here. Price went above the upper Bollinger Band. Exit was here after 10 days. And if we pin this over onto here, and we can quickly scroll through this list of trades. To me, so this one here, this is where I said, it's interesting to go through these because to me this looks like bad data. Okay, why do I say that? It's just you don't normally see this sort of action. Okay, so this is saying that there was a gap in this stock up to $143, and then after 10 days it gapped down again back to the level it was at. So I think this is just bad data from whatever provider we're using. Okay, and I'm not sure what provider this is, but yes, looks like bad data to me. So always verify the results. Next time you might want to run this, if you find bad data, you might want to then go back and run it without those symbols in. But for the most part, the data is good, and you can see, you can see each of these positions how they made, the positions that won, how they made money. You always obviously want to look at the losing positions as well and see how they lost money, and you would do that by sorting by P&L percent negative, 100% negative here. Again, a bad data point. This doesn't look like bad data to me. That just looks like a bad trade. That looks pretty scary, actually. I don't know. I mean, I would go back and verify that that data is correct. Perhaps there was a split here, but with a big gap like that, I think you probably want to go back and check. Yeah, so you can see all of the bad trades were down here. Now, what you can do, what's interesting to do, is once you've seen the trade list, we also produce from the trade list, we produce the equity chart. Shows you how your equity changed on a daily basis throughout the life of this strategy, which is 10 years of data, and this is how it worked. Probably looks very similar in this case to the market. So the overall market looks very similar to that over that period of time. Let's as an interesting point, we'll bring a chart up, press the space bar. I'm going to get data from the current symbol list for SPY. That's a good representation of the overall market. And I'll set it to be a monthly view. We've got 10 years of data here, and expand it up to match that sort of time frame. And all I'm trying to do is get a visual of if this does follow the overall market. And as you see, it's pretty close to the strategy following the market. So other charts that you get in here, well, there's obviously the summary, which is basically the stats of the whole strategy, how many trades there were, how many winners there were, percentage of winners, the average percent of each winning trade, and overall average percent. Tells you, starting equity, ending equity, net profits, that sort of thing. And then the P&L distribution, which is an interesting chart to look at. Now, scaling on this is a little bit off because we have some trades over here that are ridiculous, and so the scaling is a bit weird. The bottom area is the more interesting, not more interesting, but it's an interesting area to look at, which basically is showing every single trade as a bar on this chart. So if you see a green bar, you know that is one trade. I can click on that as well, and actually that's brought up in my other window, the trade. Okay. Let's find something in the middle here. I'll click on this one. Alright, and that's brought up. I'm going to bring it into view over here. Hang on a sec. Yeah, that's brought up that particular trade. Alright, so all of these trades are, all these represent individual trades. Now, what you can see is the red is not good. If you're long on this strategy, the red is not good. But what is potentially even more scary are these long wicks, because that means that there was an adverse excursion that went way beyond the amount that was actually lost in the trade. So the wicks are not good, and so one of your goals potentially is to try and enter a stop strategy which cuts off these wicks at a certain level. And it's interesting when you try and do that, because let's put a stop in here. Let's say we'll have a fixed percentage loss stop of 3%. It's quite low. I'm just going to do this as an example, and then I'm going to run the strategy again. We'll just let it do its processing. Okay, so now we've come back, and if we're looking at this bottom area, and sometimes we have to zoom out to see more things here. Okay, so now you see that these, you don't get very variable red bars. The length of the red bars is pretty consistent at 3%, because you've chopped the trays off at that level. But the problem is, you do get some that lose more than 3%, like this one here lost more than 3%. So let's take a look at the chart for that. I clicked on it, and we'll take a look at where the entry was and where the exit was. How did we end up losing more than 3% here? Well, we can see it was a gap down, and so the first time that stop would have been executed would have been on the open on this day. And it tells you the reason for the stop for the exit here too. So yeah, you'll get situations like that. So it's always good to put stops in and try and play around. For most strategies, what you'll find is that by putting a stop in, you're going to limit your overall gain, but you're going to potentially smooth out your drawdowns. So might be sort of an easier strategies to follow. Anyway, we are pretty much running out of time, so I'm going to take a few more questions and see where we're at. Yeah, we can do that, Ed, in an upcoming webinar, ranking selectors. Okay, backtest period be set for a limited period of time. Yes, so backtesting period can be changed. So two ways to change your backtesting period. One is when you're in entries and exits, you're running against the symbol list. So my list of symbols is set to, if I hit the edit button, you'll see that I've got 10 years worth of data, and I can see that I've got data from for some of the symbols. Not all have 10 years worth of data, but if I go to say the earliest symbols, I've got data from April 4th of 2005 to April 2nd, 2015. So when I run the strategy without doing any date filtering, it's going to run it over the whole of that period of time. And the very first entry, or the last in this spreadsheet, because it's in reverse order, is May 2nd, 2005. Okay, so I can always see how much data it's using. So I can obviously just fetch less data for the list and run it, and I'm going to run it over a shorter period of time. Another way of doing it would be to say, use the date filter. Okay, so I can set a date filter to be, if I wanted to run this test for this year only, I could say 1/1/2015 to 4/2/2015. Alright, and once I've got that set, I also have to click on this button here which says use the date filter. So I've set a date filter in here. I also want to use it. And then if I hit run again on this strategy, it's going to limit the amount of data. So now if we go to the very end of the sheet, our first signal will start appearing on January 2nd, 2015. So now when we run the trade simulation, we're only going to be running on that list of entry signals. Can you add more than one entry criteria? Good question. So as you see, what I did here was I dragged in a selector, which is essentially a script, over to the scan. And so whatever criteria are listed in the selector is what you are going to be running. So the way that you would run more than one criteria is to modify the scan. And how do you know what's in the scan? Well, click on the scan here, cross above upper Bollinger Band, hit the edit button, and here's the criteria. Basically, it's generating an event whenever there's a cross of close above the upper Bollinger Band. I could add another criteria in here, and save this, and what will happen is it will be saved under my scripts, and then I can drag my script over to, or double click my script, and it will appear over here. So that way I can create my own scanning criteria. Seasonality backtest. Yeah, so seasonality is one of the templates that's new in the program, and you'll find that under the annual trends category. All right, we'll run seasonality on weekly options, basically looking through 10 years and finding our seasonality for all of these stocks. Okay, so this is an example of what you get. Now there isn't really a scan set up to allow you to run a backtest on that information. What you can do is, like with any template, is if you have found a bunch of signals that you're interested in, you can highlight them and say add those signals to the entries for a particular date. So that's something you can do. What else did I want to say about that? That's let me just do that. Let me choose a date here. I'm gonna at random choose. I'll choose February. Let's say March 2nd, 2015. So March 2nd, 2015. If I say add to entries, what's going to happen? And let me first of all clear these signals from here, then go back to the template and say add to entries. What you'll find in here is we've now added those signals for March 2nd. So we haven't generated these signals from a scan now, we've just manually selected them from a template with a particular date and added them in here. And so now we can use this in our manual backtesting of those signals. So that's one thing you can do. Yeah, I mean it's interesting in seasonality has a little bit of a different connotation to other types of testing, because seasonality is essentially a back test, right? It's looking over the last 10 years and saying these are the stocks that performed well in this section of time over that 10-year period. So it's already identified stocks that do well over that period of time. So in order to back test it, it's kind of already, gotten the results. So you'd have to be a little bit more fancy when you do a real back test, right? And only look at data up to a certain point in time for the prior 10 years to that point in time, and try and do that. So it would be a lot more difficult actually to do that sort of test. And I'm not sure how valid even that would be, because you're only adding an extra 1 year's worth of data to the results. And so seasonality is sort of, I think it's kind of its own back test in a way. Let's see. Yeah, we can devote one Saturday to backtesting focus for sure. Plan on including fundamental criteria. So the users of High Growth Stock Investor, and I'm not sure if you are viewer 63, if you are a High Growth Stock Investor user, but High Growth Stock Investor so High Growth Stock Investor has a lot of fundamental analysis. So I would recommend if your focus is fundamentals, I would recommend getting that program. It doesn't do back testing, but it allows you to do scanning on fundamental criteria. What you can do within EdgeRater is we have a good link between that program and EdgeRater, is that we can add certain fields into some of the reports of the scanning. So if you've run a scan for, say, stocks that are moving, the in-play template, then you can add a column to that template, which would potentially be it contains some of the fundamental criteria. So that is a possibility. And I think that link between the two programs is going to get, going to be working a bit more on that to make that a little bit better and a bit stronger. So that would be the way to use fundamental criteria. Most people I find are not fundamental traders, and most people are purely technical traders. I say most people that that use the software are purely technical traders, obviously. but high growth stock investor is a good way to look at fundamental criteria. All right, so folks, don't forget we have next weekend. Go to the EdgeRater website and look at the courses, webinars. You'll click on 11 for Saturday, and it'll be our weekly stock market wrap. If you haven't downloaded the trial and you're not using the software, then go to the products page and download the okay, you'll be able to download the trial. I will have to send you a link to the download for the trial, because okay, I'm gonna have to put the link back on here. Okay. The link was in the email I sent out for this webinar, so go ahead and download the trial, and you'll get 30 days to try the program, absolutely free, no credit card required or anything, and just play around with it this week. And then at the end of the week, if you have questions, bring them to the webinar, and we'll also talk about the how the market has performed during the week and some of the analysis we can do in the program. Okay guys, that's about it. Thanks for coming. I will send out a link to the recording pretty soon.